It's January 2024. Let's see what I've done. Hey everybody, welcome back. This is another episode. I think we're on 39 at this point of the 5-year $500 series. It's cool. So we had the new year, and I said I was gonna kind of go through my new January buys for this episode, and that's what I'm gonna do. So let me get my face down here. Actually, I'll keep it up for a little bit, then I'll get it out of the way. Sometimes people say that they can't see the full screen. That's the only reason I keep it off there. Let me go ahead and just pull up my positions here. And obviously, we had the New Year holiday. I made my $500 contribution in this portfolio, and let's go ahead and take a look at the portfolio screen, the account screen. So we're up to $2,608, and this is obviously fluttering around a little bit. So you can see that the 500 is still incoming. It hasn't settled yet because it takes time. It takes like 2 to 5 business days to transfer. I currently have about $12.32 worth of dividends that'll be landing here pretty soon. It was like $22 and something hit, I think yesterday or something. I can't remember exactly. There's a lot of them. So I'm not going to worry too much about tracking the specific payouts because that's what the calendar tracker is for. So as far as open positions go, well, here's my P&L for the month so far. So Tuesday, the first trading session of the year, pretty red day in the market, but I landed 0.06% positive. And again, that's just noise. It's not anything that I was doing actively trading. Just kind of locking profits as things are moving up as appropriate to reduce risk exposure, because that is my number one job. It's not to try to compel profits from the market. So yesterday was a little more red in the market, and it kind of affected the bigger positions a little bit. So on Tuesday, the saving grace here was Johnson & Johnson moving up. I think it went up about 4% or something. It's a pretty significant move, and that kind of offset everything else. Obviously, the Neo Leap contract is kind of pulled down a little bit, and then it's bouncing back up now. It's a leap, so I don't really care. I plan to sell this in like summertime, so I don't have to worry too much about the small noise. And then today, obviously, we're kind of a mixed bag, right? So if I look at the market, it's a little bit of a mix, right? So again, I'm not too worried about the noise. I'm more focused on the realized P&L and the dividend payouts. So if we just look through these really quickly, you can see that these are all my holdings. Let me just switch it over here. You guys could probably see it a little bit better. So Maine, actually, let's just look at the orders, right? Let's do it in a sensible way. So starting on this one right here, okay, here up. So I bought 3 shares of CING, and then yesterday that broke even, went 2 cents above my break even, so I sold 3 out of the 4 shares that I had, so that moved my average from $13.55 on one share all the way down to $8.22. So it's about a 40% drop. So now if it goes back up to that $13.55 price, that one share that I've essentially moved down will then be up about 56, 57% in profit. So that's the only reason I'm doing that. I'm just building down, reducing risk exposure. I'm prioritizing that over all else, and then that way I'm just getting a low average. That's my only concern here. MBI, I'm doing something similar. I bought 2 shares Tuesday. And then I bought some more this morning. I bought 3 more. So I'm taking a little bit more of an aggressive approach on this one. I'll walk through that here in a second. Johnson & Johnson, one of my biggest dividend positions here. I bought 1 more share this month. Then I bought 4 more shares of Tesla, 4 more shares of Clip. These are the high yield, lower cost ones. So these are a little bit riskier. So I just added equally to both of those. Maine is a longer term hold that I plan on holding. It's one of the newer ones. So now I have 2 shares. So I bought 1 for December, 1 for January. Ladder is a long-term growth position. I bought 3 more shares of that one. So I have 10 shares total. And this is, again, I'm starting to build into the later ads. So that way I can kind of build these out equally. Well, of course, Johnson & Johnson kind of takes charge, right? That's my biggest growth position. That's where most of the money is going. And Clip and Tesla are still the aggressive second and third place ones, position size wise. And then they're really going to carry, they're going to do most of the work early on. And then I plan to reduce those positions once they hit a cap. So I don't want to continue to build these over the entire 5 years. I just want to have a nice cap amount. And then once that kind of hits max efficiency, I'll just continue to take the funds that I would normally put into those and spill them over into the ones with higher potency with less risk. So just a numbers game. It's just a particular piece of the strategy, but I figure it's good to mention this early on so that everyone's like, oh, why aren't you buying more Tesla? It's like, I don't need to. So, all right. So ladder is the long-term growth position that I want to buy. That offers, I think, a 92 or 93 cent dividend quarterly. So I'm okay with that one. MBI, here's my first buy from, I bought 1 share yesterday and then I bought 3 shares this morning. So if we go ahead and look at some of these, you can see MBI is down here at this support level. I'm anticipating a hold here, and the keyword there is anticipating. So if it doesn't hold, I'm still in a position where I can manage my P&L, so I'll still be net profitable. If I have to cut it, I can. We'll get my tax deduction if I want to. Otherwise, it should push up and I should reduce the position here at break even. I may still add more to it. If it holds the support level, I might add some more. But what I'm not going to do is throw 90% of my portfolio in this and hope it turns around, right? I've got a very defined limit to the amount of dollars that I'll commit to this. And the reason for that is because I understand exactly how far down it can go, where I need to cut it based on those dollars so that I won't exceed the profit I've already locked in, okay? And then up here for CING, this is the one that, let me just walk through the 15-minute time frame here. I placed some buys yesterday. I got 3 shares, and then it came up here and it broke even. And as soon as it broke above my cost basis, I reduced it, because remember, my number one priority is to manage risk exposure, and that means reducing the higher risk positions as soon as possible. And of course, MBI in the 15-minute is finding support at a key level, so I'm just going to wait and see where that goes. If I was a riskier trader, this would kind of be the setup right here. And I'm not going to get into strategy or all the speculative side of things, but this would kind of be where I would look for a trade, using, of course, this as the low, and then a, maybe a 1 to 2 risk reward or something. If I was a short-term day trader, which obviously I am, but I'm not doing that on this account, right? I don't want to just take $500 up to 10K in 2 months just to show off. Like, that doesn't help you guys learn. So that's why I'm here doing this the more realistic way that you guys can follow along with. And one more piece of that is I don't want anyone to blindly copy me. This isn't like a, do what I do and get rich kind of thing. This is a long-term approach, and everybody has different goals and different resources. So if $500 contributions every month is too much, that's okay, right? Snowflake is doing a $50 account where he adds $10 a week. That's okay, right? Some people have more money that they're willing to put in. And ultimately, I'm doing this for a YouTube series. I'm doing it to help people learn the concepts, not just to make money. I don't need that. So I don't want anyone to just blindly copy me. And the reason that I have specific positions here, like Clip and Tesla, are because I've balanced those based on the things I want to demonstrate over the next 5 years. It's not because I want to optimize the portfolio and make the most out of it. So just, keep that in mind, that everyone has different goals, different resources, different time frames. Some people are closer to retirement. Some people are a lot farther away. Maybe you're a little more aggressive early on, and maybe you're not in a position to be aggressive. So that's kind of the whole point of this series, is to teach you guys the underlying concepts and to kind of classify these dividend positions. And, a lot of the concepts apply outside of the dividend realm too. You don't have to just use dividends. As the series goes on, I will also be incorporating other strategies once I get to certain dollar thresholds in the portfolio. I plan to do covered calls. I plan to do some splits. I plan to do the wheel strategy. I may convert this over to a margin account as well at some point, which will, of course, freeze the account for about 2 weeks. There's all kinds of things that I can do on this account just to teach, right? And again, it's a 5-year project, so it's not something that I'm just going to throw everything at a Tesla and hope it wins, right? Because that's crazy. So yeah, just kind of wanted to make that point. Now, if I look at the dividend tracker here, you can see that the numbers have changed slightly. This is where things are starting to curve nicely. So the annual income now is projected at $497.60. This does not include future contributions, reinvested profits, dividends reinvested, or anything else of that nature. So keep that in mind. We're still in the plus 20% yield on cost range, which is pretty cool. We went up to 22.48%. As long as I can maintain that trajectory without taking insane amounts of risk, that's automatically awesome. Because again, hedge funds get you about 5 to 8%. 401k is about the same, but you got to pay fees on those. And I can use this money right now if I want to. Obviously, I don't want to because I want it to grow. But you can see here that if I have, actually I have to reduce MBI. So that number is going to change. I lied. So let's change this down to 1. I think that was MBI. Let me just double check. I'll do it right here on the video so you guys can watch. Oh, no, I'm sorry. I have 7. So 7 of these at 643. Okay. And I just kind of want to give you guys this over-the-shoulder view so you guys can kind of see how I update these and the impact it can have. So obviously I don't plan to hold all 7 shares of these. So this number here that's about the same. It doesn't matter. MBI doesn't offer a regular dividend, I guess. But if the number did change, I would need to take that into account as a false inflation. So very careful about what this number represents, as well as the fact that it's balanced out by reinvested profits, dividend payouts being reinvested, things like that. So it kind of cancels out, and this is still an underrepresentation of what the portfolio should yield, which is why I'm not worried about necessarily harping on that point too much. But I did want to point it out because there are some inflations here. Like if you look at SSIC, for example, that's not one I'm going to hold for the entire year. So this number will be reduced by the annual yield of that stock. So as soon as I could sell it, of course. If I hold it through the next quarter or next payout, absolutely I'll get that. But I do also have the share P&L that I can factor in. I've got other positions that I'll be rotating in. I've got reinvested dividends that I'll be factoring in. So this number is still very, very small in comparison to the amount that will actually be yielded on this portfolio. And I want to make it a point next year to look back on this episode or one of these episodes and kind of show that reflection. At the end of the year, if this was accurate, this number should be at or lower. My net P&L for the year should be at or lower $497.60 on this account. However, it should be much, much higher, right? So I'm just going to call that out ahead of time. And as long as I don't do anything crazy, we should easily, ideally we could double or triple that number pretty easily due to compound growth. So with that said, I'm going to jump off this episode. I appreciate everyone hanging out. It's almost Friday. We've got the short holiday week. Next week, we're back in full swing. I think the market will see a little more direction. We've kind of got this little down then up scenario here happening. So we'll see what happens in the market. And in the meantime, let's just stay safe. And that's it. I focus on this stuff once a month, and then I can just leave it alone if I want to. I don't have to trade. This part of it, 70% of my cash is done. I don't have to think about it. I have 30% left that I can just play with if I want. All right, so I will catch you guys later. Thank you all for watching, and make sure you guys subscribe if you're not subscribed. That way you'll get the notifications for these videos, and then it'll also help more people get exposure to this video, and then that's how we help people, right? I'm not trying to shamelessly plug myself. I'm not monetizing any of this stuff. I'm not plugging any products. I just want people to get exposed to it so that they can see that there's a better way. All right. Everyone have a good day and goodbye.